Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn and Kansas City wheat. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Chicago wheat. The dominant pattern here had been the dark blue mid-February to mid-June bearish shift pitch wall. The dark blue upper time, currently at 538, had been previously breached. Then last week the market used it as a base for a move higher, up through, amongst other things, the bright green upper trend line, currently at 550.25, a significant longer term pattern, which I will discuss shortly. Then the December 2020 low at 566 even, and the bright pink neckline extension, currently 568.25, and that's of the March to June 2025 reverse head and shoulders continuation pattern. And that's up to a fairly free area, though somewhat rarefied, with the new congestion, or the next congestion, being a loose area between 588 to 594 and 3/4, containing the March 2021 low at 592.25 and a June 25 high at 594 even. However, this was not the most immediate interesting feature. That lay was the previously highlighted whole move since mid-December last year, which had formed a reverse head and shoulders bottom, or triple bottom, which anyway, the reverse head and shoulders bottom is a derivation of. And I spoke about this 4 weeks ago when I said, and it is a long piece, and I quote, "This move up has now given me the opportunity to lay out some targets above for this pattern." That's a primary target X would be up in the 560 area, with a secondary hard to reach target X1 up in the 567 area. So what have we left in the way that could alter this idea? Well, there is something that came to light by my looking at the longer term charts for my annual review earlier in January. It is a March/October 2025 to date bright green descending triangle pattern, which you can see on my daily chart highlighted in bright green. Currently 512 even to 550.25. And that's the end of the quote. Last week, prices reached both the primary target X at 560 even and the harder to reach secondary target X1 up at 567 even. Now back to the break above the bright green descending triangle pattern. Last week's move above it or over it led me to consider naming some very, very long-term targets, which we would have a primary target X2 up in the 626 area, with a secondary much harder to reach target, which is up off my daily chart in the 668 area. There are also some other things to consider. The early November 25 to February 26 action is a dish or a rounded bottom pattern. This gives us some separate targets of a primary target X3 up in the 603 area, with a secondary hard to reach target X4 up in the 622 area, right on the 50% Fibonacci line in the May 24 to May 25 move at 622.25. Another more recent feature is the bull flag formed over the last 2 weeks. This pattern gave us a primary target at 584, a target already reached, and a secondary harder to reach target X5 up in the 608.25 area. Then there is my final point, and is again something I saw from my longer term monthly charts earlier in January. It is a May/July 2023 to date bear channel, highlighted in purple on my daily chart. The lower purple bear channel line is below the bottom of my daily chart, but you can see part of it in the lower left hand side of my daily chart. The upper bear channel line is closer today to the market, as today prices have reached up and started to test the congestion between 588 to 594.75. The upper purple bear channel line is still near the top of my daily chart, but also the top of the current market. That's currently at 6.21 even. I said last week, and I quote, "This is one to just keep in mind for now." End of quote. Chicago corn. Above the market, as I've said repeatedly, sits the 50% Fibonacci line for 2025 at 454 3/4, which, as I have also said here repeatedly, and I quote, looks a seemingly formidable resistance, because just above that is a very shallowy bearish bright red lower trend line, currently at 455 even, to the July 23 to January 24 descending triangle. End of quote. These two managed to cap prices back in November last year, and again in between Christmas and New Year, and once again in early January this year. So, as I said earlier, formidable. The latest incident of prices trying to up to those two resistances had the outcome of the market falling like a stone with a combined key reversal down and bearish long black Maribozo. You can see that on my daily chart. In the fall, prices broke down through the green short medium moving average, currently at 442 even. The November 2020 high at 439.5, which in truth I previously said didn't look like much support. Then the flatlining mauve medium moving average, currently 441 3/4, as well as the slowly declining gold long moving average, currently 431 even. Since then, prices have recovered up through all these, the market utilizing as a base the, as I said 10 weeks ago, and I quote, the important 50% absolute Fibonacci at 425, which in turn led to the October low at 425.5. Any such possible moves lower would be the ones to watch, as it may well determine the future health of this market, as prices seem right now to be willing to just hold and maybe test the resolve of the overhead seemingly formidable resistances. End of quote. Since then, the gold long moving average has acted as a base of action, and now this week, the November 2020 high. Now, I had previously thought that the whole of the mid-January today action could be a possible bear flag, but last week I shelved that idea, because if it was going to happen, then it would have done so before now. So to get a better idea of some of the larger forces at work here, I would like to look at my longer term charts. Now, before we go any further, I would like, for the purposes of this discussion right now, I'd like to set aside target X1 below at 335. This relates to the lopsided head and shoulders top pattern dating from 2021 to 2023. And I'll refer to it should we get closer, but for now, I'd like to concentrate on what new things we have for 2026. Thus, I said in my annual long-term video commentary published in January, and I quote, "So what new feature have we seen developing through 2025? Well, I looked to the whole 2023 today action as a possible double bottom formation, though I think the market's having doubts about this pattern right now. You see, to form this, we'd have to move up towards the 2025 high, around the 61.8% absolute Fibonacci line, and the gold 5-year moving average. That one is actually at 531 3/4, and breach higher, which is a considerable order to fulfill. Yet in the meantime, we have the mauve 3-year moving average, currently at 461 1/4, bearing down on the market. And as we saw in part back in February 2025, this can be a significant bearish pressure. However, just that would not be enough for me, and this is where the action over November and December 2025 come in. Both of these months have ended up as indecisive patterns, as if the market can see that mauve 3-year moving average bearing down on it and is already flinching. I'm not sure at this stage whether the prices could really handle this mauve 3-year moving average hitting it and mixing with it, but we still have a few, very few months left. One final, and I suppose an indirectly related point to the double bottom idea, plus this also relates to an earlier target I spoke about. I said last year, so that's back at the start of 2025, and I quote, "One housekeeping point and one point to watch for. In housekeeping, I think by this time next year I will have likely retired the secondary target X1 below, given the recent actions." End of quote. Well, I've decided to keep this target X1 still on my monthly chart for one more year, just in case. And that's the end of that full quote. Kansas City wheat. The rise we saw since just before Christmas last year had been capped by erosion from the March 2024 low at 551, more so by the dark blue lower trendline extension, currently 552.5, to the November 23 to April 24 descending triangle, as well as earlier by the March 21 low at 559.5. However, the market continued to rise and in the process formed a reasonable looking December 25 to mid-February 26 bright red bull channel, currently 545.25 to 577.75. Last week the market breached the bright red upper bull channel line and tried to exploit the move higher, but it failed, making only the one single close last week over the next nearby resistance, which is the July 21 low at 578, before coming back down. However, the low last week was higher than the week before, and the one was higher than the week before that, and that was higher, etc. A very significant bullish sign, as prices rose up this week again over both the bright red upper bull channel line and the July 21 low. We have once again had only the one close over both of these, so no confirmation, but it is a start. Last week, because of the bullish nature, I said, and I quote, "A challenge up to the June last year high up at the 590.5. This now gives us the opportunity for targets above for this breakout, assuming, of course, that it's not a false break. And that's of a primary target X up in the 609 area, for secondary hard to reach target X1 up in the 632 area. Once we manage to pass the June and April 2025 highs, well, we seem to be running into a fairly clear area all the way up to the 38.2% Fibonacci line with a big old 2011 to 2019 move at 618 even." End of quote. This is still the situation today. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.